focus to the ferrous metals market then, and India's largest merchant iron ore producing company NMDC announced its list price of iron ore and fines on the 9th of February. But NMDC has shifted its pricing structure from a tax-inclusive model to one that excludes royalty, DMF and other charges. Meanwhile, India's crude steel production witnessed a strong growth of 12.5% on a year-on-year basis in the first 6 months of FY26, reaching about 82.3 million tons, but iron ore production meanwhile continued to remain stable despite the increase in steel production that we saw during the corresponding period. So what led to this and what's the outlook going forward? To discuss this, we are now joined by Nishtha Mukherjee Sinha, GM Iron Ore Ferroalloys Coal at Bigmint, who is now joining us. Nishtha, afternoon, and thank you so much for joining us today. First up, let's talk about iron ore prices that have now been set by NMDC. How do you compare this with the previous revision? And this is also because NMDC has shifted its pricing structure from a tax incentive model to the one that excludes royalty and other charges. What, in your opinion, led to this change in pricing mechanism that NMDC has done?
Thanks, Asesha. Good afternoon. Yes, in the latest price revision announced by NMDC, which is India's largest iron ore miner, the miner has announced the prices exclusive of statutory levies such as royalty, DMF and NMDC. In contrast, the previous revision, which was announced in mid-November 2025, was on tax-inclusive basis. Notably, NMDC had shifted to a tax-inclusive pricing model back in July 2023, in which they had incorporated the royalty, DMF and NMET and into the prices, the trend which has now been reversed. On an apple-to-apple comparison basis, if we do as per our analysis, after adjusting the November 2025 prices to exclude these levies, the Jan 2026 price levels indicate a marginal increase of around INR 150 to 250 per ton, varying as per the various products.
Okay, so that's as far as the pricing mechanism is concerned. But Nishtha, where do iron ore prices stand currently in the domestic market? And what are the factors that are likely to drive iron ore prices in the domestic market? We'll talk about steel demand and steel prices in just a bit. But first, let's focus on iron ore pricing trends in the Indian market.
Yes. So there are three factors which are influencing the Indian iron ore prices currently. First is the rise in crude steel output, but the iron ore supply continues to remain tight. India's crude steel production has increased by 10% on YOY basis to 163 million tons in calendar year 2025. However, if we talk about India's iron ore production, that has increased by about 4% to about 295 million tons during the same period. The mismatch between the steel output growth and the iron ore supply has led to tightening of availability of iron ore in the domestic market, which has supported the prices. Second factor is the global iron ore price hike. FE62 benchmark index, if we talk about, comparing it with the December numbers, so that has increased by $2 per ton on month-on-month basis. That was again because of pre-holiday restocking and steady demand that we saw from China, which resulted in overall global iron ore price hike in the month of December 2025. Third point is steel price recovery that we are seeing in India currently. So Indian steel mills have raised the list prices of hot rolled coils by INR 1,000 to 2,000 per ton for early Jan 2026 sales. This is the second hike that they have taken after the hike they had announced in end December or late December deliveries. Similarly, rebar prices also, if we have a quick look, they have also gone up by INR 3,000 per ton for early Jan 2026 sales. This is again a second hike which we are seeing from late December deliveries. So the factors which are supporting steel prices are imposition of safeguard duty on flat steel products and declining rebar inventories, improved demand, which have collectively supported the steel prices. And since this is the last quarter of the fiscal, in general, we see this quarter being the strong quarter for India. So overall sentiments look good, and hence this has also supported the Indian iron ore prices.
Okay, so iron ore prices continue to remain supportive and the trends are usually good in the fourth quarter. That's the word coming in. Nishtha, thank you so much for taking your time out and joining us here on ET Now and helping us understand where iron ore prices are headed and what the outlook is for the iron ore industry and for the steel industry going forward.